What's going on, everyone? Today, we're going to be talking about VA home loans and occupancy fraud. There's definitely a big myth out there for the veteran communities. I see this both in my comments and other people's videos comments, is what is the requirement for a VA home loan and living in that property. So there's definitely a couple of things that go into that. And that's what we're going to cover today. My name is David Piatek. I am a loan officer and able to help you use that amazing VA home loan. Down in the description, you can schedule a call with me. So today we're going to be talking about Chapter 4 and the occupancy requirement. And so the myth that exists is that one, you have to live in a property for a minimum of 1 year. And that is not true when it comes to VA home loans. And I'm going to show you all that in the VA handbook, because sometimes people are like, where do you get all your information? And we get it here because it's the VA's basically Bible to say, hey, these are all the requirements for a veteran to meet occupancy. And there's also some caveats in here that I may touch on just kind of as we go over it, of different scenarios we run into where people have been denied by lenders because they didn't know how to structure this for a veteran. But that's what makes it nice. Being a veteran myself, I understand all the different complexities and components of it. So let's dive right into it. And of course, this is going to be extremely small. So let me zoom in, and I'll also talk through it as well, so you guys don't have to worry about reading it on a small screen. Okay. So initially, let me go right here to the top. So this is going to be the section 5 of this, right? So the VA, the law requires a veteran obtaining a VA home loan to certify that he or she intends to personally occupy the property as his or her income. As of the date of the certification, a veteran must either personally live in the property as his or her property, or intend upon completion of the loan and acquisition of the dwelling to personally move into the property and use it as his or her home within a reasonable time. And we're going to go over what reasonable time means. And by the way, just kind of a spoiler alert, nowhere in here does it say you have to live in here for a year. So you could literally move in and a week later, you could rent out the property. That is how the program is designed, right? So it's not, life changes, people get deployed, and there's tons of different examples that we can go over. Now, one thing that people don't realize is that and one of the big benefits of using the VA home loan initially when you buy a house is that you can do an interest rate reduction refinance loan on a investment property. Okay. So the VA loan, as long as you purchased it, lived in it technically, so according to this, 1 day, you met the occupancy requirement, and then you move out, it's still a VA home loan, right? You don't refinance out of it. What happens then later is, let's say rates drop and you want to do an interest rate reduction refinance loan. You can do that on a second home that's a VA, that has a VA loan on there, an investment property that has a VA home loan on there, and still get primary rates, meaning you'd get better interest rates versus a second home or investment property. So that is pretty big. Now let's talk about this occupancy within a reasonable time, which typically is going to be 60 days. So when we're and that's a general statement because there's exceptions for sure to that. So basically that if you buy a property, you intend to occupy that property within a 60-day period. Now, anything more than 60 days can or may be considered reasonable if a couple of things are met. So one, the veteran certifies that he or she will personally occupy the property as his or her income at a specific date after closing, and that a particular future event that will make it possible for that veteran to personally occupy the property as his or her home on a specific future date. So anything more than 12 months wouldn't be considered reasonable. And a couple of things that can play into that I've seen myself, right? That, hey, you know what? You've been hired for a job and you got a work relo approval, but you want to be able to get that property ahead of time, and you make enough money to support your mortgage and this future mortgage as well. So that would be something that makes sense. Now, one caveat that exists where a veteran does not need to occupy a property is that if you are on active duty and you cannot personally occupy the dwelling within that reasonable time, okay? So a child or a spouse, right? So dependent child or spouse can meet occupancy requirements. Now, this actually does happen often for us when we're working with folks, because we'll have somebody, let's say, on active duty in Georgia, and their spouse's family is in Chicago. Well, they're not leaving, and they want to purchase a home in Chicago for the spouse to live in closer to family with their child. That makes sense, but again, you have to be able to support it. And then also, if you're overseas, that's a little bit different, which I'm going to cover next. So now let's talk about occupancy requirements for deployed active service members. So this is another caveat that you can actually be single and purchase a property without meeting occupancy requirements at the time that you close. Okay, so this is why there's some exceptions. So single or married service members, while deployed from their permanent duty station, are considered to be in a temporary duty status and able to meet the occupancy requirement. This is true without regard to whether or not a spouse will be available to occupy the property prior to the veteran's return from deployment. I cannot stress as well how many times people are like, well, I'm deployed, and the lender's saying that I can't do this because of this. As you have to be able to afford it, right? So the bottom line across this is that you have to be able to afford it, right? So, hey, spouse is meeting the requirement. I'm on active duty. That makes it good. Now, when it comes to you being a veteran or in the Guard, or if you're in the Guard or Reserve, that can get complicated. And I can probably do a whole separate video on that. And you guys can always reach out to me if you have questions about that. Happy to talk to you. There's no cost for you guys to do that, because there's just so much information out there. But if you are a veteran, that whole a spouse or dependent meeting occupancy, that doesn't work. So just kind of keep that in mind during that process. Now, occupancy after retirement. So if a veteran is going to be retiring within 12 months and wants a loan to purchase a home in the retirement location, a couple things need to happen. Now, I have these are rare, a lot more rare to see, but it can happen. So verify the veteran's eligibility for retirement for the specific date. Include a copy of the veteran's application for retirement submitted to his or her employer, and carefully consider the applicant's income after retirement. If retirement income alone is insufficient, obtain firm commitments from an employer that meet the usual stability of income requirements. Now, there's a note on here. Only retirement on a specific date within 12 months qualifies. Retirement within the next few years or in the near future is not considered sufficient. And I want to touch on this because we also work with a lot of folks that are transitioning, going through TAPS, right? Hey, I'm year to 6 months out. This is what normally happens. You not only have retirement income that you're counting on, but also you may be counting on VA disability, the different forms of it, or maybe Social Security disability on top of that. And so a lot of times to qualify just on your retirement income is hard in today's time. The other part to it is this employment piece. Now, imagine yourself. A lot can change in 12 months if you were to accept a job offer. And another part is that they've noted on here is that it has to meet stability of income requirements. Most of the time, you need to have an offer that is not contingent on anything. So you have to be fully approved. And most of the time, there's like background checks. There's something in there that could prevent you from being able to use that. So take it with a grain of salt. It is possible, but again, reach out for that. Now, deployed occupancy due to property repairs or improvements. So home improvements or refinancing loans for existing changes to the property, which will prevent the veteran from occupying the property while the work is being completed, constitutes exceptions to a reasonable time requirement. And the VA did also talk about this in a circular they did 2 years ago, that let's say, hey, the property doesn't meet the VA's minimum property requirements. A veteran can set up an escrow account that they fund themselves. And I'm not an attorney, but we've done this in the past. You have to typically put up 150% of that repair work, and then you can proceed as long as it's not a safety issue, but you can get exceptions for the VA, but lenders do have overlays, and I have a whole video on that on the channel, so make sure you guys like this video, go over to the channel, subscribe to it, and in the search feature, you can find all this stuff with that. Next one, intermediate occupancy, veteran need not maintain a physical presence at the property on a daily basis. However, occupancy as the veteran's home implies that the veteran is located within reasonable proximity to the veteran's place of work. If the veteran's employer requires the veteran's absence from home a substantial amount of time, the following two conditions must be met. So you travel a lot for work, you're not always home. The veteran must have a history or continuous residency in the community, and there must be no indication that the veteran has established, intends to establish, or may be established, or required to establish a primary residence somewhere else. Use of the property as a seasonal vacation home does not satisfy the occupancy requirement. So there's a technicality here, right? So in general, when we're looking at what does it mean to be a primary residence? So that's basically 6 months and a day out of the year, and then vice versa for being a second home or investment property. The other part is, to caveat to this, is that airline pilots get an exception to this. Ironically, we've had people that are stationed, hundreds of miles away, and then they're able to leverage the VA home loan because they are pilots, so they're able to fly back and forth. There's no cost to them, and it's normal for them. Other times, right, where they're not pilots, but they work for airline, and these are real life examples we come across, we'll have veterans that have 3 days on, 4 days off. So if they've to travel for work and they can show like, hey, I do this all the time right now, then you can actually qualify for buying in another state. Another one that we recently came across was somebody that teleworked. They worked in the office 4 days and they were home 3 days. And what they were doing, and they showed a record of it, right? They showed a year's worth of like, hey, this is what I do every week. Then we were to say, look, on this third day or fourth day, that's when I drove home, and this is my tolls going into the area. So we were able to document like, yes, this is actually where they live, even though it was like 4 hours away. And another example, right? I'll give you one more and we'll cut it at that because there's so many different ways you can skin this. And this kind of falls into people realizing that they can have multiple VA home loans, right? That's the power of the program. Now you're capped at some point. Check out my video on multiple VA home loans. There's just a lot more math revolves around that. So I had someone that lived an hour and a half away, but they wanted to live closer to work. They leveraged the VA home loan, purchased a multifamily property, where then now they can actually have income on 3 of the units. They're occupying the property during the week. They're going home on the weekends. They can Airbnb their unit over the weekend, generate income. It's a win-win. Now they got an asset. This is the power of the VA home loan. All right, and this just kind of goes into the certification piece, and then it kind of goes into interest rates. So that's definitely a lot of information. Hopefully that clears this up. Let me know in the comments section if this has held you back from buying a property because of these misconceptions in occupancy. And I'll catch you guys on the next video. Make sure you guys hit the like and subscribe button. Talk to you soon.